Hello and welcome to another trading video for a daytradersjourney.com for August 20th, 2015. Here we have the chart of the E-mini S&P 500 on a 3-minute chart. And this is just for the day session or what they call regular trading hours. Today what I'm going to cover is third entries, fourth entries. Basically, when you're looking for a second entry short or long, as we do with this methodology, it sometimes leads to taking third entries and fourth entries instead of the second entry because the second entry didn't qualify as a valid trade. And an example of this would be here, where we start in the morning and we break to the downside of the 5-minute opening range, and we look for our first entry, or we look for our first trade. And here you can see that we just have a first entry here. We didn't have a second entry, so we keep looking. We have a new swing low here, and this right here is a little mini first entry here. You have a swing low here, prices go up, then this candle breaks below the low of this candle, so that's your little first entry. And then after that, you're looking for your second entry would be here. So we don't take this second entry trade because the previous bar, or the signal bar, was not bearish. It was a doji. So I like to take short trades off signal bars that are bearish. And this one wasn't bearish. It was a doji. So we'd wait for the second entry bar, which is this bar here, to break below, or for price to break below that bar, and it didn't. So we have no valid entry or valid trade trigger here. So this is a second entry still, but there's no trade off of it because it didn't qualify for our rules of taking a trade. So we keep looking, prices went back up, and here's a third entry at a break below the low of this doji bar, which we can't take a short below that doji bar because it's not a bearish bar, signal bar. So we have to wait for the break of the entry bar, which is this long, big bearish bar. And we get that breakdown here at 53.75, 20.5375. So you have a break here. Finally, you have a trade set up to get short here, and this would be considered a third entry short triggered trade. So we were looking for second entries, obviously, to get in, but the second entry wasn't valid for an entry for a trade trigger. And so then we keep looking, and we take this third entry here. So this is an example of we're looking for second entries to go long, but sometimes the second entry will not be valid for us to enter a trade, and then we have to keep looking, and that leads to the getting in on a short a third entry. So that's an explanation of what I mean by taking third, fourth, fifth, whatever entries, because we're taking the first one available after the second entry or at the second entry that follows our rules. So we have a trade here. Here's another example of a third entry. This is a re-entry trade based on this third entry. So this trade worked out. Then we have a pullback again, and we get into this trade here. This would be basically a re-entry trade. And this swing low dots weren't here. So basically, this would be, once these dots are in place, then we know we should start our count over again. But when this trade was triggered here, for its re-entry trade, these dots weren't here yet. So this is considered a re-entry trade because by this point you would have been stopped out on the trailing stop of this trade here, and you can get back in. And here's an example of, at this point, these green dots were in place, which means a new swing low was put in. So we start our count over again, and we would have a count here of first entry here. Then a second entry would happen here. Let me move the circle here. You can see that we didn't break below the entry bar here. It's bearish. We broke below it, and that would be our entry here at 51.75, 51.50s, 50s, and you can see price went back up, hit our 2-point stop. So that's a loss. That's why this circle is shaded red for a trade that would have been lost. These are trades that would have been profitable for blue circles. So we have an example here of a losing trade, which is a second entry short that got stopped out. You can see the writing here. And after this happens, you have to be quick on the trigger to get back in if a valid reentry triggers, and we did want to have a valid reentry. As we got stopped out, here's this line I drew here, which is the resistance line on the second entry short trade I took. So when I look for another reentry here, I want a bearish signal bar, and then I also want a break below that signal bar to be below this resistance line, because this resistance line can become support if price doesn't go through it. So as price went through it, I felt good getting back in. So you get back in this trade as a re-entry trade, and you probably reach first target. And here's another example. As it goes back up and stops you out, you have another chance of a re-entry trade here as a break below this signal bar, which is bearish. So you would get in here. And so here I'm not really counting first, second entry here on these circles, blue circles, because I already have a valid second entry short that was triggered here, and I got stopped out. But there's another valid entry here, which can be, you can count it as a third entry if you want, but I just call them a re-entry trade based on this because it's already been triggered here. It just didn't reach first profit target. And once we're below this resistance line here, or this line here, I feel comfortable getting back into the trade in the direction of the short direction. So because we're prices below the 5-minute opening range, prices below the EMAs are bearish, 21 below the 50. So we have re-entry trades here. So there's some examples here of how I would count these out for entries. Another example here, here's a fourth entry short, and the reason it's fourth entry is because we have a new swing low here. We start our count. 1 was our first entry here, and here below this bar here is second entry. We don't take this second entry short because we're not at good trade placement. Trade placement meaning that we want to have trigger trades around the 21 EMA or the 50 or above if we're taking a short. So it didn't really pull back far enough for us to get in short here. So, but you still have a first entry, you still have a second entry. It's not valid to take the trade here. And then you keep counting, and here's your third entry. You don't take this one because this bar is green. We want a bearish signal bar for taking shorts. So we don't take it right here below the break of this bar here. We would take it below the break of this bar here, this entry bar, but we didn't get a price below that. So we started keep counting. We had a third entry here. Now we have a fourth entry coming up. Boom, below this break of this bar, this bearish bar, fourth entry. This is the first time we've been able, since this swing low, per my rules, to enter the trade, to trigger a trade, and it triggered on the fourth entry basically. So, an example: we're looking for second entries all the while, but sometimes they might not be valid to get in, so you have to wait till they are valid, and which will be considered a later entry than second entry. And so that's an example of the trade counts and how I count my trades and how I get into them. Again, I call them second entry trades, but they could be a lot more than that if they're not valid at the time the second entry forms itself. Hopefully this is clear and gives you some information of how I count this out and how I look at this. If you have any questions, please post your comments below, and I look forward to showing some more videos. Thank you very much.